What is up? It's Dom with Dom Trades, and today we're going to be talking about how to trade the pre-930 session. And what does that mean? It really means how to trade the NASDAQ before it opens, which it opens at 930. And ultimately that golden hour there, it's from 7 to 930. And that's a window of opportunity that we can find clean trades sometimes. And I think right now it's becoming one of my favorite sessions of the day. We've got Asia, London, the pre 930, the 930, and then we've got lunch and the afternoon. But again, I think pre 930 is currently sitting number one in terms of how easy it is to trade and how smooth and calm price action usually is. So before we dive into it, in front of me, I've got 3 trades that I've taken. We're going to be focusing on that middle one for today for a demonstration of like an A+ setup when it comes to trading the pre-930. The one on the left and the one on the right, those are, I think, good examples of trades, but the concepts that I'm going to be illustrating, it's going to be around that middle one. There on the top right, that's just my Top Step account. There's 5 Express accounts connected to my main leader. All of them have roughly 3.2 thousand in it. Today was a pretty big day of 1.1. And again, just to let you guys know that I'm actually trading these models that I'm going to be describing to you. Let's hide Top Step X and let's dive right into it. Okay. So first of all, when it comes to trading the pre-930, you essentially want to get around the charts around 7 o'clock, right? That is the line in the sand. Usually I try to get in 15 minutes before that just to understand what happened in the Asia session and in the London session. So what you'll do is around 7 o'clock, you will ultimately mark a line on your charts, 7 a.m., to denote where that golden hour starts from. And then what you'll do is you'll scrunch your charts, or first you'll kind of see what price did, right? Since midnight, since the open, and what price ultimately printed for us. And you can see here, price opened up around this area here. It kind of dilly-dallied within one of the new day opening gaps over the last 5 days. It created relative equal lows. It swept them. It pushed higher. It finally broke above the new day opening gap. It displaced higher with a fair value gap. It pushed off of it. And then it ultimately created relative equal highs here. And it also had relative equal lows form around 330 to 350. So when I woke up, it was around 6:30, had my daily broth, my chicken broth. And I looked at what can possibly the market do before 9:30. And ultimately, rule 1 here is you're looking for smooth highs and smooth lows as possible targets. So stripping away the daily, the 15-minute, the 1 hour, every single time frame but the 1 minute, I think the easiest way to deploy this is the following, is you'd want to scrunch your charts like this. And ultimately, your eye should gravitate towards certain levels. You can see right here with the charts scrunched, we've got this level right here, that's relative equal highs. And we've got this level right here, which is technically a quadruple bottom. Okay. And what does ICT say when there's relative equal highs and relative equal lows? Basically says, wait for one to be taken before you're taking the other. So again, if you're trading around 30, to be honest, that's a 50-50 in my opinion, just looking at the 1 minute, and we'll have to wait for more. So number 1, wait for the right time after 7 o'clock. Number 2, look for relative equal highs and relative equal lows within the previous sessions and just see what stands out to you. So these 2 levels stand out to me. Level 1, let's put an eyeball here. And level 2 is right there. Okay. All right. Step 3 is you're waiting for a sign, market structure, price displacing, taking liquidity, something from the market. So briefly talking about this first trade here, the reason why I'm not going to focus on it is, again, I just saw triple bottoms here. Price aggressively pushed lower. You can see here, from a 1 minute perspective, it was failing to close bodies above the mean threshold of this fair value gap. And I just took a quick 1 to 1.5 short, and it never got to my lows. I was off by 1 tick. It pulled back slightly, and I just closed the position for roughly 1 R here. So again, it was a very small position. In my opinion, was that an A+? It wasn't, but I just tried capturing a quick and easy move. And it looks like technically what price did is it just created a better level for later on. So what did price do at 7 o'clock? It just exploded to the upside. Is this move catchable? in my experience with my knowledge, even looking at this hindsight, I wouldn't know how to catch this long just because of these relative equal lows below us. But price pushed up higher. It took out relative equal level 1, relative equal level number 2. And then what it did is it pushed into a daily quadrant wick. It pushed into some higher time frame fair value gaps, which is a 1 hour and the 15-minute. And then what did price do? I was looking for price to give me something that is telling me that it's turning around and it's going to the other end. And the thing that really stood out to me here was this blue fair value gap. It's a fair value gap that was respected to the upside. You can see here, price pushed up higher, created the fair value gap, came lower. You can see the bodies are still staying within it. It pushed higher a second time. You can see here how many times it bounced off of the top of the fair value gap. And the moment that we started closing, below it and then the lower halves of it, that's when I took my position, targeting these quad bottoms essentially. So it's the right time. We have relative equal highs and lows. One of the highs was disrupted. We have a market structure shift, taking out liquidity, right? So the MMS, it happened technically right here. So let me draw that here. The market structure shift, where you can see, it created a new low here. It broke these lows, and then price ultimately pushed up into, I don't have it drawn here. I didn't see that at the time, but this fair value gap here, and then it collapsed lower. Again, could you have taken this short right here? I think you could have, but that's a very aggressive short. And I waited for a bit more confirmation using this IFVG, this inversion fair value gap, closing to the downside, keeping my stop loss above the last bearish order block. And then it was a quick 2.3 to 1 targeting these lows right here. So again, ultra simple, ultra clean. This is the model that you want to use every single day from 7 to 9:30. Look at these engineered relative equal highs and relative equal lows, and price will deliver. It's very smooth. Always look out for 8:30 news. And that is something that I think all of you can add to your arsenal and maybe back test it first. A very clean bread and butter setup. All in all, guys, that's really it. It's 5 points. You're looking for relative equal highs, relative equal lows before 7 o'clock from 7 to 9:30. That's when you're going to be executing. It's really nice to get that in the macros, like the first 10 or the last 10 minutes of every single hour. That's like a bonus. But ultimately, you're waiting for a liquidity sweep, something that price is telling you that it's moving in the opposite direction. And then you want to aim for at least a 2 to 1, aiming for those relative equal highs that you see as an obvious draw. So that's really it, guys. We don't want to overcomplicate this. I'm going to leave it as that. It's simple, it's clean. And I think this here should be enough for you guys to start back testing and seeing if you guys can create a profitable edge pre-9:30. If you guys enjoyed it, feel free to drop a sub and a like. I'd really appreciate that. And without further ado, guys, safe trading, and I'll catch you guys soon.